Welcome to TradeTheNBA.com. This is John. This report is for the 11th of October. A lot to get into. So when you hear me talk about short snakes, DOC spread situations, they become poignant because we have this ABM that gives us very key levels to say, hey, below, we could be short, above, Or when we reach certain support points, we can look at the DOC readings and say, hey, are we likely to have support? Because this is the funny thing about people. They always talk about support and resistance lines. Well, it's only support if there are buyers at a level that you think they're going to be. And when we get no indication of that, you have warnings. So I've talked repeatedly about this, particularly on the intraday charts, because it's so powerful as well. These crossover points where the DOC lines connect, because what we're talking about is an imbalance developing between different parties. And in this particular case, when you have that cyan rising over the green after they've met, it indicates that shorts have overtaken longs, particularly when you have a cross of the green moving back below red. That's an indication that even midterm buyers have moved below the support of longer term buyers. Same thing we talked about, even with the support that was holding here, it was all short-term buyers. There was no support whatsoever from midterm or long-term buyers, and we had passed the crucial, period of the sixth in that, where really the money comes in, and when the money can't hold it up any longer, which was just this brief run of the steel coming higher, not enough to do anything. Not to mention you had no reset of that steel below red and no orange. The orange has got to come down and reset below the red to give you your new setup, which is what happens down here. So the fact that it was this huge move, it's not really relevant that it happens in a day, because we all know that when people head for the exits, it gets very crowded and liquidity dries up and people just pull their bids and it just keeps dropping very fast. And you've heard it time and time again, but markets do fall 66% faster than they rise. Now, days ago, I had put these no, I didn't put them recently. They've been here for a very long time. We've just been so much further above the range that we haven't talked about them for a while, because we hadn't had anything significant enough sell-wise that had generated. The closest we got to it was back over here, where we had just that brief move that only took us to the 61% mark, and also gave us the dip below the red lines, which could have put another line right on this candle here, would have been equally as appropriate at the 2810 range for this dip below the red line, which had not been retested as well. So a couple of those markers. Now, it didn't happen anywhere in between here. We got some overbought, positive extremes that happened as late as right over here, but they got filled pretty much within a week or so. So these were the only longer term ones, and it was all the way back here. Click the first one, which is this one right here. 2736 is the low. In fact, I've got that just a little bit too low. Right there would have been more appropriate for it. And the secondary one, which was the more likely to get hit when you have these first breakouts of big moves, particularly on a daily, and that was at the 62. Now you can see that's already been filled. Just like that. Take a look at that. Isn't that beautiful how that does that? Still, good probability of making it all the way to the 36, though. We did already in pre-market achieve 48. I didn't do the percentage, but I usually look for about an 80% move of that. If we look at where the open was, right at 42, also a good one if you just kind of ignore the little tail. Though this wasn't much of a tail, so I don't mind having it at the full range, but there you have it. This is pretty clean. Nothing that we would find shocking about what we're seeing there. And of course, we knew that the NASDAQ was already weaker from much earlier on. Didn't even have that complete meeting between the green and the cyan. It broke apart, pretty much identically to the S&P. It was just more dramatic, and of course, much higher on the ABM levels, and boom, just completely collapsed through there. It was a beautiful day. It gave some support to the euro because obviously people fleeing U.S. markets takes it out there. But there's a lot happening in the euro and worldwide that a lot of people aren't paying attention to. This liquidity issue of banking in the EU. Like I was talking about before, you have Germany looking, Greece looking to Germany for reparations for 200-some billion. The Italians wanting to go over their budget, the EU fighting back, so their bond yields are going crazy, which means their banks that have all been buying Italian bonds are pretty much going to become insolvent as the value of those bonds are worthless because, as rates rise precipitously. Now, of course, you have Donald Trump talking about the Fed, and I've been complaining about the Fed being too tight for, ever since he got elected. Day one, they started raising rates even before anything happened. And it was always a question, would they raise rates too fast to try and stop the economic growth? They're doing their best. And not to mention, it's skyrocketed the deficit. You're looking at another point or two, and you're going to be in almost $1 trillion in debt service. We've already gone from, most of the deficit that had early on was strictly related to the rise in interest rates. And we haven't seen the inflation to back it up. So it's just been an excuse for the Fed to raise rates for no real value other than to claim normalization, whatever that's supposed to mean, given the fact that they've interceded in the markets for a decade. There's no such thing as normalization when they're doing arbitrary moves. Of course, bonds, this is a crazy thing to even find people flight back to quality, so to speak, because you got to put your money somewhere. But it's crazy because with the proposed ideas of the amount of increase, treasuries have to keep dropping to match the return that's now being offered. And I still think 113 is high because if we shrink this down, I got another one, I think it's down to 109. We'd have to go way back because we've been way outside this curve. This goes back all the way over to here, and that was back in the 15. So that shows you how long we've been talking about this. A little pullback in oil. That's going to happen here with that people pulling to get cash to cover margin situations. Pop in gold, definitely, we talked about this, would be the safety net. Still nothing to write home about here. We're just now getting, you got a bullish snake developed right here for the first time in a while. I would need to see that orange dip all the way below red to see it transition. Now look at this one. So on the Skype chat, prior to market, I put this up there because we were seeing some very unusual behavior in pre-market. Let me scroll all the way over here, and then I'm going to enlarge it so you can see what we were talking about, because it got really sketchy. And I was noticing this as it was happening, and that's why I posted the opportunity to short this one as it was taking place. And that was all the way up here at the 28.87 and 85 range, both of them. And I was explaining the beauty of looking at these short snake developments with the green below red, and then particularly as you start to drain below that negative 7.5, it becomes really strong current that drafts it. And then this is something I like to talk about. You need to see that steel reset to think that you're going to have any hope of these small little bounce back moves trying to do anything. And particularly when you're hovering below that negative 13.5 here on the shakeout, it doesn't tend to produce a whole lot of extra. So we followed this one all the way across, and that took us all the way back down to where we started to see improvement right around 28.40 range. But it wasn't long after that that we ended up with another set of the exact same situation here of the breakdown where we're making lower red peaks. You've got clean line. That took place, all the way back down at 28.40. And then it did it again, continued to fall. And what a massive volume day when you think about how far I had to shrink that chart to start with. Shows you how many bars, and these are all actual 5Ks. So, I mean, the amount of volume in one day was probably equivalent to 10 or more days all compressed into one event, and it was quite dramatic. So we started a whole nother run lower, and that became another fantastic series. But again, the closest we got to any steel reset was right here at this particular point, just as we then developed new short signals. So this was the strongest bull section within this, and then boom, clear short signal right along there. We ended up with additional ones that happened a little further down. I continued to add and trail. In fact, we take a look at where I still am. What's my average from up here? There it was 28-25 range. Been selling back and forth, going in between. You can see how far away my stops are. 27.98 for one, and then I just moved this one to just above the highs at 86, and we're all the way down there. Now that's a lot of range for some people to have, but it just means that the noise doesn't get in the way of the general directional trade. But again, do you see steel? Again, tried to do it again right here, got closest to a reset at that particular point. Again, produced another beautiful short snake. That was at 08, and this was, well, even before market close. And then we continued, and every one of these golds well below the 38%. Well, in fact, we look at it from the 50, but these are in most cases below the 23% Fibonacci line, or as we call it, the Morganacci, and just nothing. And every time we get a little bit of buying right here above the 23, red dots, positive extremes, already overdone at that particular point, unable to sustain anything. And pretty easy to see when you get that orange moves all the way back above. In this particular case, you have this narrow range, and gave another short setup, and boom, made new lows all the way down to the 27.50s. We're in a little bit of a buy, but again, that's fading here really quick here as the orange breaks back above. Nice improvement. You finally had double matching lows, higher shakeout. We can see the improved extreme histogram. But again, unlikely once you get the short snake to be able to sustain too much of a move. Minus 17, there's going to be a lot of movement back and forth within these ranges. Right now I have right at the 100% as it starts to range, but what a huge jump in our volatility. Very exciting stuff, and pretty clean, just really easy reads with the DOC setups. Oops, too many clicks there. I always like to highlight this. It's easier to move because if I try and scroll across, sometimes it just keeps going forever and ever. But you can see creating the little higher pivot from a red DOC standpoint. But again, as we've talked about, you need to get above that 7 to have any kind of sustained run. And every time we get to the negative 7.5, we were rejected. The strongest one again happened right here as we got right to it and put in a short DOC snake right at the key point, and that caused the breakdown. So this becomes very effective, and I hope that you really pay attention to it, and that this is why we talk about where we're at with the daily, and we can see that playing in between these lines is just a matter of picking. From my standpoint, I like being short generally from a broader daily. In fact, we had our daily. I was showing this one as well, which was the MBI Opus. Couldn't catch anything off the Starhawk in that. Took its break-even point on that. The previous one had done the same thing from a Starhawk because we just were trading laterally, and so not involved in this big decay on that fall down. So we knew where we were at, and again, you just keep sticking with what the readings give you, and the market is telling you in advance, even if price doesn't seem to react sometimes immediately or as fast as you want. It's just a matter of sticking with it. And do we see any new turnaround buy setup? No. So the fact that you could even end up with a higher day or whatever, it's not going to mean a whole lot without corresponding matching signal, because it just indicates that there aren't the buyers that people need to keep things going. So don't want to go too long. As always, though, trade well, and I will keep posting relevant charts as they pop up. And you couldn't ask for anything more prescient than I gave you the other day. That was the easy way. 100 minus 115 was the final closeout before Asia opened up. And I would imagine that they're still going to have some systemic problems overseas before the market starts. So I'll probably post some stuff well before the market opens. As always, trade well.